Hi, and welcome to the Coronavirus Freight Market Update for April, 28th, 2020. My name is Kevin Hill, joined here by Michael Vincent.
Welcome, everybody. Yeah, this is our twice weekly coronavirus freight news and market update, and it's an interactive show. So get your comments and questions in, and we'll be happy to answer those as best we can on FreightWaves, LinkedIn, and on Facebook.
Yeah, I'll be monitoring them right here on my computer, and actually Dooner will be throwing those on here once we get up on social. So, a great show for you today. It's a truncated show, 30 minutes. Half hour show. So, we will get it started. But we have Andrew Cox coming up, our research analyst here at FreightWaves, to talk about the news headlines on FreightWaves.com. And then we have Zach Strickland, our director of Freight Market Intelligence, talking about some earnings reports coming out this week. And then we have our head economist, Anthony Smith, joining us to talk about economic numbers here in the middle of the COVID-19 freight market pandemic. But first, as always, let's go by the numbers and see where we are here on this Tuesday.
Yeah, let's get it going. We'll go through the numbers. So today is Tuesday. So on Thursday, we were at our case count, U.S. case count was at 848,717. We've crossed the million mark. We're at 1,011,408 as of yesterday. Deaths were at 47,684 U.S. last Thursday. They're now at 56,855, so that has risen as well. When we started this on March 17th, we were at 6,344 cases and 110 deaths, and so now some interesting things. The closed cases at that time, the death rate was at 83.67%. Did you know that? It was at 83.67% of the closed cases at that time.
Oh, okay.
And the recovery rate was 15.79% of closed cases. Now the death rate is at 29 and recovery is at 70.99. So a complete. It has flipped, which is really good. The daily new cases has been dropping for 5 straight days now, with 23,296 new cases yesterday. And you have to go back to March 30th to get to somewhere near there, which was 23,900 or 197. So that's also a good thing. And the daily death rate has been dropping for 7 straight days on a curve, with 1,384 yesterday. April 3rd was the last time you got below that number, and it was at 1,263. So it looks like we're coming down off of that. Although the IMHE Institute of Health and Evaluation at Washington has increased the total death count to 74,000 sometime in like August is where we'll peak there.
Very interesting. So we are, that peak is up there. It's going to be a little bit elongated. And that's part of flattening the curve. Yeah,
it shows like by May 10th, 15th, it'll be flat. It'll be kind of flat, but there'll be, cases. Anyways.
Very good.
So that's where we're at right now.
Thank you very much for that information, Michael Vincent. And off to the news with Andrew Cox, our research analyst, talking about the headlines on FreightWaves.com. And we're talking about flattening the curve. Things are getting better and rebuilding and kind of reopening the economy. So what do we have on, especially on the retailer side, Andrew?
Yeah, Kevin, the first article we have is about 2 of the major trade groups that support large retailers. They have issued their blueprint for shopping safe. And this is a phased approach to how we can reopen the wider retail economy over the next couple weeks. And, a lot of people have been pushing for this retail to reopen. I mean, retail sector in the U.S. is huge. It employs nearly 25% of the employees, and it comprises 70% of GDP. So it's very important that we get this up and running soon. And I'll break down those phases a little bit that they came out and laid out. The first phase is to reopen all of the distribution centers, and they're pushing for this immediately. They think all the distribution centers need to be reopened to ensure a smooth supply chain when things do open back up after phase 2. And the phase 2 is the opening up of some stores. They didn't give a timeline for when they would expect phase 2 to happen. It would be a state-by-state basis depending on tracking data and COVID-19 cases, so it's going to be a different rollout. But They want to open up some stores with, quote, robust health and safety protocols. And these are things that we've been hearing about. It's social distancing, avoidance of unnecessary touching, masks for both customers and employees, gloves, and regular cleaning of surfaces, as well as limited occupancy. So, we've heard about it in restaurants and in places only allowing so many people into the store at once. And then the phase 3, again, no timeline for this, but that would be the lifting of all restrictions while maintaining very strict cleaning protocols throughout the reopening.
Andrew, we look at a lot of consumer credit card and debit card transactions. We had that in our weekly DHL Supply Chain Pricing Power Index article last week. And while they're at very depressed levels, it does look like that's kind of flattening out as well, right?
Yeah, consumer spending is picking up. We looked at the Bank of America credit and debit card spending, and we've only have it up to the 16th, so we'll be getting a new report later on this week. But up to the 16th, if you look at that last week, consumer spending had definitely bottomed in almost every category. You saw things picking up across the board, especially in e-commerce. You saw e-commerce growth being up 50% year over year if you average out the last week of data we have. You also saw grocery spending starting to pick up again. We saw that massive pull through where everybody kind of panic bought and got a lot of food for a couple months, and then you saw a lull in grocery spending, but that has also picked up. And then lastly, you saw an immediate bump from those stimulus checks that began to hit on the 15th. You saw online retail spending, you saw consumer spending overall take a massive jump on the 15th and 16th. So you saw the stimulus checks working their magic.
So, Andrew, when you were showing those numbers, and I saw it on FreightWaves Now, some of those upticks after the stimulus pack or the stimulus paychecks, right? The pay came out, the stimulus money, and obviously the e-commerce, et cetera, was a big bump, and then clothing, et cetera, did not have that bump because most of those stores were closed, but they could have been bought on e-commerce, right? I mean, that could have been done through e-commerce, but we saw that those numbers didn't go up. So with these new retailers and clothing, et cetera, pushing to reopen, will there be that rush to go back and touch and try on clothes and go to these things, or are we learning a new way and things are advancing faster than they were previously? There was already the death of brick and mortar we've talked about, and the slow decline and the repurposing of buildings and certain, shrinking and that type of stuff.
Well, I certainly think that it's much easier to buy clothes in person than it is online. A lot of people have, odd sizes where they have to take, they feel like they need to try on clothing, so they typically buy it in store. I know I'm one of them. So people are more willing to buy online electronics with those stimulus checks. That's what we saw. We saw them jump up almost 200% year over year the day that the stimulus checks hit. So that's what they were more looking to buy, kind of standardized items rather than buying clothing items like you would need. So I'm hoping that the demand will be there. I think it's going to all depend on when people feel safe to go back. They may open things up, but they may not feel safe. But people are looking to buy clothes. I know that the seasons are changing. People are looking for new clothes. I think there will be some pent-up demand for the clothing and wider retail when it reopens.
Going back to e-commerce, Jacqueline has an article out on FreightWaves.com about touchless delivery and how that might be the norm after kind of as we go back to normal.
Yeah, he makes a good point. I mean, there's a lot of LTL or last mile deliveries that are happening, e-commerce purchases mostly that are happening without touchless or without touch between the customer and the delivery person. They're using proof of deliveries, pods is what they call them, whether they be some sort of technological advancement where they actually have a box and a QR code, or it's just Amazon taking a picture of a good that gets dropped off. It's likely that moving forward after this, people are going to be more skeptical and cautious of their kind of avoidable interactions with other people. I think people are really going to look to ways to cut down those interactions. And one of these might be your delivery guy. You might not need to sign anymore. You might do it all through the app on your phone or something.
That makes sense, and a lot of that could have been done earlier. Again, an advancement, and I see that sticking as well. That makes a lot of sense. But you talk about threshold delivery and across the threshold delivery and white glove, et cetera. That's going to have to return. You can't just contactlessly have a new refrigerator or washing machine installed in your house.
Of course, there's going to be certain items that you have to have people in there for, whether it be cabinetry or big items like a washer and dryer or a refrigerator, as you said. There are some items that are still going to require person-to-person contact or even will require them coming into the house, but you may see less interaction. You'll still see those people wearing masks, and you won't exactly sign a document the people won't sign a document to notice that you've received it. You'll do something electronically without interaction. So they may be in the house, but I think even if they do come in, you're going to see reduced human interaction between the two groups.
I think it'll be interesting as well, Andrew and Kevin, to really see how shopping at those stores that are already open. Like you go to the home improvement stores like a Home Depot, et cetera, and you can go online and you buy, and then you just curbside pickup, right? Have you done this?
Curbside pickup?
Yeah.
Oh, of course.
Yeah, I mean,
yes.
at restaurants, right?
Mm-hmm.
But
every
you're doing it at paint stores and home improvement stores and so on and so forth. I've done it. I've done some projects at home lately. Weekends you can't go anywhere, so I'm doing some upgrades and that type of stuff. And it's really, really, actually very, very convenient. You just order it on the computer. It says it's online. You go up and you say, "Hey, I'm here. I'm in parking spot number 1," and they come out and they put it in the back of your truck and you're gone. I was talking to George Abernathy yesterday about that, and he's experienced the same thing. Why would I ever go back in that store?
It's kind of a cross-boom between e-commerce and retail.
Yeah.
Like brick and mortar. You go to the curbside and pick up
Be
what
interesting
you order
to see
online.
if that sticks or is a large growth form of buying. I think it will too. It will for me.
Yeah,
I loved
definitely. Hey, Andrew, what are they saying about driver morale?
Sure. So Workhound is a kind of like a driver social media platform that allows employees the opportunity to provide anonymous feedback, so they can go on there and tell things about their employer. And if you look at the percentage of the different complaints or the different things that are filed, we can kind of get a gauge of driver morale. And you can see that the data in the beginning of April began to pick up significantly. Driver morale was up 9 or 10%, gauging on their kind of the indexes they build on the amount of comments they get. Morale was up, but they were questioning pay a lot. And this is something we've seen as a theme throughout the country, whether it's the Houston protest or stories we've heard from drivers. We know that drivers are getting frustrated with the rates that brokers are putting upon them. So pay was a big point of contention on the Workhound app.
Right. And so we have the daily pickup too on FreightWaves every day. And today's is about what people are spending and then some conditions in New York City, right?
Yeah, I mean, it's just as I mentioned earlier, consumer spending has picked up, and we've seen a lot of people, just like Mike, that have gone out and done home improvement projects. We saw home improvement spending be up considerably in the double digits through the last couple of weeks. We've also seen a lot of small appliances in the kitchen. A lot of people are having to cook at their homes. Of course, the restaurants are closed, so they've started to buy things like sandwich makers or different types of small appliances for the kitchen. So that is what people are spending their money on mostly, things for in the kitchen and home improvement.
Thank you very much, Andrew, for today's headlines. We have a couple of viewer comments here. Molly Pruitt works for West Rock, the packaging company, and she says, "I'm in the packaging business and really want to capitalize partnerships with companies that are pivoting into online retailing. Happy to know what barriers freight folks are seeing with packaging and or issues their customers are facing." And then Hope White, who's the CEO of White Logistics, says, "Hey, everybody." So, hey to
How you doing,
too, Hope. Very good.
Hope she's doing well.
Yes. And next up, we have Zach Strickland, our Director of Freight Market Intelligence, here to talk a little bit about earnings. And we'll start out with Cummins.
Yeah. So Cummins Diesel, obviously the biggest diesel manufacturer in the United States, reported, year-over-year declines in revenue and earnings per share. But the big surprise here was the fact that they crushed the earnings estimates reported by the analysts out there, and a lot of that was actually attributed to the fact that they were already in the process of cost cutting. They completed a 2,000 employee layoff that was announced in November throughout March. So basically their revenue declined about 17%, but also their cost of sales declined about 17%, really mitigating the impact to the earnings per share numbers that everybody was expecting.
So the freight market in 2019, where we saw the oversupply, really it decreased the amount of new sales, right, and led them into basically already being in cost-cutting mode.
Yeah, they were already basically inoculating themselves to this. The freight market itself being in decline. That 2018 overheated segment had already kind of played out. Last year, we're still getting a little bit of that impact in their numbers too. So that some of that sequential decline, Q1 over Q1, is actually attributed to the fact that we were coming out of a really hot, order market. Orders had declined roughly about 23%. Year over year at that point. So we were already in this process of declining. So there's some of this year over year, decline in revenue that you can actually attribute to a cyclical decline prior to coronavirus.
We have a couple more viewer comments here. Vic Patov, greetings, folks. And he's at Asset-Based Freight Solutions at Alpha. And then JB Smith here. Hello, everybody. Happy Tuesday. And then Mark Horowitz at RPM. Transportation 2.0 is here due to COVID-19. So we have that. So back to the comments. What were some of the key highlights that grabbed your attention, Zach?
Yeah, I think one of the biggest, obviously the biggest takeaway from this is the fact that it's still really hard to see what exactly the coronavirus is doing to some of these, sectors of the freight economy. We were already in a sequential decline in terms of a cycle, and it's not really apparent how much the coronavirus, because if you think about manufacturing, this is something that they're not necessarily going to see a whole lot of as the coronavirus shut down factories in mid-March, really. So people were still doing, making orders at that point in time. So we're only seeing a small fraction of what we expect to see here in Q2 of what the coronavirus is doing to these, manufacturers and obviously subsequently the freight economy out there.
Yeah, you would think, Zach, with where the volumes are, and even if it looks like, and we'll talk about this later. You talked about it earlier on FreightWaves Now. We've got some volumes coming up, et cetera, but it's not affecting rejections, right? So it's not nearly high enough to support an uptick in prices. One would suspect if this continues, and even getting to the 93 level, the amount of volume of capacity that is out there, that you're going to have carriers falling out, right? So that would have further pressure, I would guess, on a company like Cummins.
Yeah, obviously you have the orders come in, and then Cummins feels those orders later in the cycle. So it's probably going to be a pretty long year for Cummins, even though they went through this cost-cutting, measure already. So to an extent, they were preparing themselves for it without knowing what they were preparing themselves for. But you're talking about capacity that's going to be loose for what appears to be a pretty long period of time. So from about May through probably the summer, we don't really anticipate or see any signs of volumes reaching a level that capacity is going to tighten significantly anytime soon, which means that a lot of companies are going to start cutting their capital expenditures. They're not going to start buying trucks. Every single earnings report we've watched or we've seen from the larger carriers thus far has reported a year-over-year decline in tractors in their for-hire unit. It doesn't necessarily mean that there is an overall decrease in capacity. J.B. Hunt increased their dedicated fleet by a good percentage. So there's still some trucks floating around out there, but the used truck market, of course, collapsed, indicating that there's not necessarily a lot of demand for these Class 8 vehicles, at least in the early part of the year so far, and it probably will continue throughout the summer.
Dana Maglio from Facebook says, if retail, especially clothing, shifts further into e-commerce, reverse return logistics will become even more important. Are companies starting to make shifts in their operations in advance of this kind of shift? I won't ask you that question, Zach. We can turn to more on the international front and go over Kuehne Nagel's earnings.
Yeah, so Kuehne Nagel, the second largest freight forwarder in the world, basically reported almost a 30% year-over-year decline in overall EBIT, earnings before interest and taxes. They saw declines in every single one of their segments, including air logistics, sea logistics, road logistics, and contracted logistics. Some of those were impacted more than others. The air logistics appeared to be the least hit hard in terms of overall, revenue hit. or EBIT hit, but that's also one of their smaller segments. The air logistics division he cited was inoculated to an extent by the fact that a lot of even though 60% of the capacity came offline with all the air passenger flights, some of those, that actually helped to kind of mitigate some of those losses by inflating rates in the pharma and some of the high pressure expedited freight that was coming across the country. The sea logistics, however, was pretty hard hit. They saw a lot of drop down, obviously, in the China to North America and all over the world. They did not get any. It doesn't appear that they got any real impact from the rate increases online. They were down 29.5% year over year, Q1 over Q1. So, not a lot of good there. Now, the good thing about Kuehne+Nagel's report was the fact that they said that they were able to keep 90% of their facilities operating throughout this entire outbreak. So they stayed essential, if you will, throughout this whole process.
Yeah, and it's going to be a tough road for them moving into the future. I mean, as we spoke about on freight forecasting, I believe it was last week when we were talking with Greg Miller about the potential cliff and the can't blank sailings, et cetera, which would obviously affect Kuehne+Nagel quite a bit. We have now seen those imports into the U.S. drop off that cliff, have we not?
Yeah, no, the imports have fallen off. They have not recovered quite to the level that they were prior to, the big Chinese New Year trough that was obviously deepened and extended by the coronavirus shutdown in China. But it has started to claw itself back. Again, capacity is coming offline. There's a lot of void sailings, like we talked about with Greg last week, that have not materialized yet. So moving forward, this looks like it's going to be a pretty tough environment for somebody like Kuehne+Nagel to really make any significant headwinds, at least in the near term. We're probably looking at a Q3, like most people, before we really see any significant uptick in those volumes.
Thank you so much, Zach, for that earnings update. And have a great day on that. So we have a couple of viewer comments here. Ronald Catano, regardless of online ordering, the products will products will still move on a truck. So I thought I'd read that before, but this is a different one. But it was a very similar question.
One. Yeah, yes. No, she was talking. The earlier one was about reverse logistics.
Yes, that's right.
Which is really interesting and something that we need to start getting into as we get further into the recovery. Is what does the new look like? Because supply chains are definitely going to change, right? They're going to be maybe less offshoring, more centralized, but also you need to be it also needs to be diverse, right? I mean, which way is it going to go? You can't have all your eggs in one basket, right? In case something happens, and it's got to be more robust. So reverse logistics will obviously be affected by that, and absolutely, even if it goes to e-commerce, it's still got to get to the consumer.
Yes, and we have Xavier Villanueva, who has a very optimistic point of view on this beautiful Tuesday here. Good morning, everyone. Any day above ground is a good day. Have a great day to you all. So you can't get much more optimistic than that, right?
Absolutely. And speaking of any day above ground is a good day, let's talk a little bit about what we're seeing in SONAR and what we were talking about earlier on FreightWaves now.
Well, let me get through a couple more viewers.
Oh, okay, great.
Yeah. Eric Serta. Sales executive at RZL Logistics. I want one of those pullover jackets from FreightWaves. Is there somewhere to get those? We'll see what we can do for you on that. And then Kenneth Carter, president at Meriton Freight and Logistics. This is my current marketing research platform as a freight broker. Best news show ever. Thanks, guys.
Awesome.
I know,
there you
right?
go. We got a fan.
What is SONAR telling you right now, Michael Vincent?
So load volumes are stabilizing and actually starting to increase week over week a little bit. They're at 87.72, and dry van is still leading that charge, which is interesting and good news, because as you and I were talking about before the show, we've been seeing long haul dry van really kind of bolstering and keeping it up, and actually on the uptick over the last week. Yes. And now we're seeing that the different lengths of haul are now starting to see an uptick. So what we were looking at was really the long haul from those port areas moving into areas of greater DC concentration like Dallas and Memphis and Columbus, Ohio, Atlanta, et cetera. And now that's starting to translate into local and short haul moves, and even some medium and tweeners are starting to pick up a little bit. And what we're seeing, like we saw today in SONAR, was that we had only these major areas where we had upticks in volumes and moves. Now it's across the board. It's large markets and it's small markets, which would hint towards signs that people are getting ready for let's start getting back to work.
Reopening. Yeah, it kind of goes through the retail article that we did, that Andrew talked about earlier in the show, that short and medium haul is from that DC. A lot of those are from that DC to the store, getting everything replenished, up and running for hopefully of a reopening of the economy, and those, especially those sectors, the retail sector, those consumer-facing sectors, very, very soon.
Yeah, and you know, when we had Craig Fuller, our CEO, and Zach on, I believe it was last week, and we were talking about, you know, they set the bar at 9,300 for the outbound tender volume USA for March 15th. I'm starting to put more and more money into Greg's camp, because you're seeing auto manufacturing is targeting the the 18th to start upticking some manufacturing. You've got RELA pushing for distribution centers to restart. You've got some uptick in volumes and some pressures that are there, and we haven't even seen produce season, which is almost upon us, right? Because reefer has not. It has stayed relatively stable, but we haven't seen that produce uptick yet.
We haven't. A couple more viewer comments here. Raina Omer on Facebook. Is there any exploitation in the spot rate market from brokers? And if yes, what can the government do to stop it? I don't think there really has been like anything. It's been a tough market. So markets, you know, the spot rates are coming down. I don't think that there's been any exploitation in freight brokerage, and even if there were, the government can't do much right now to stop that. Yeah,
the government can't really do much now. I mean, there's people with signs saying regulate brokers and stuff like that. I don't think that's going to happen. I don't think that's the answer. Exploitation, it probably is. I mean, you know, freight brokers are there and they do a great service. They connect the two together, the shippers and the carriers together, and they perform great services. And they've got to try and drive margins. Are some more aggressive than others? I'm sure.
Yeah, and another viewer comment that kind of goes hand in hand with this is a question for the panel from Gregory Grimes, Sales, Logistics, and Relationships. Question for the panel: do you believe freight rates come to a point when drivers decide that it's more cost-effective to sit rather than haul freight? And I think we are certainly testing those limits right now.
We're testing those limits, and we're already seeing that. We're already hearing of drivers parking their truck and sitting and waiting and just not doing it. And you see it on LinkedIn as well, and you see different comments on our shows. You know, the owner operator's trump card is, no, I'm not going to haul it for a loss. You know?
Yeah.
And just park my truck.
And I think that's one of the things that you're going to see is to bring capacity more in line, because it's at a historic looseness right now in the OTRI index in SONAR. I mean, we're at what we're at today,
2.65. Yeah, it fell again. Yeah, despite volume starting to show a pickup, it is nowhere near any type of level that is going to affect capacity to the point where you're going to have a upward pressure on spot market. That's a ways off. It's just not happening. It's still going down to 2.65.
Yeah. Dana Maglolia, again, says or questions, one thing we're seeing in highway transportation is that where our historically significant bottlenecks with high freight volumes are now free-flowing or far from fluid, driving delay costs down. Is the savings being realized in operations by trucking firms? I think that's kind of a head haul, back haul market type of conversation, where things have flipped. I think it's just a volatile market, right? Where normal freight demand maybe not there.
Well, it adds to a bunch of different things. I don't know if it's a significant enough trend to really cause any cost savings, you know, when you don't have these bottlenecks and the capacity and the trucks are moving much more freely through these traditional bottlenecks. I don't think it really translates into bottom dollars enough to be like a boon or anything like that, right? And what it does do is, like we saw before with the ELD when we were measuring, and we still measure, the miles per hour and how quickly trucks move, is the freer flow of that capacity actually translates to freer capacity and more capacity, and then for less rejections.
So, coming up this week on FreightWaves TV, but next week is FreightWaves Live at Home, a 3-day event on May 5th, 6th, and 7th.
Thank goodness
right
it's
here
not
on
March.
FreightWaves TV. You can watch it all. It's 3 days packed of great, great talks, industry leaders, great technology, great talk about the freight markets and SONAR.
Yeah,
Later on
and
today.
be able to network and interact with the demo companies, et cetera, through Slack. What is it? What are the hours? 9 to 4 p.m.
9. I think it's 9 to 5:30
9 a.m.
p.m.
to 4
now.
Is it 5:30
each
now?
of those days, yes. It just
Awesome.
gets more and more information packed in there.
No registration or hotel required.
Just tune in to FreightWaves TV and catch Great Quarter Guys at 2 p.m. today.